Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah. You're watching Indian Open. Let's go straight to the headlines at this hour. Asian markets trade with cuts of about 1% in morning trade as concerns over election in Italy and Trump's latest posturing on China worry investors. It's back to square one for Fortis Healthcare suitors with the new board seeking fresh bids with more details this time around. The CBI files a charge sheet against key personnel in AirAsia India, including Tata Trust's managing trustee Venkat Ramachandran and Tony Fernandez. And all marketing companies cut petrol and diesel prices after 16 consecutive hikes. And in index numbers, BPCL reports a strong set of numbers in the fourth quarter as refining and marketing margins improve. Higher crude prices and dividend payouts from IOC and HPCL are expected to aid ONGC's numbers, which reports today. Well, let's take a look at the trade setup for the day. I'm afraid if you are a bull or if you've taken some BTST positions, this morning's screen will not impress you. The global cues haven't been too positive. Remember, European markets dipped on Italian turmoil, on this no confidence motion that is coming up for vote in Spain this Friday. So it was looking all red in the European markets. Italian bond yields have hit 4-year highs, and Italy remains that big talking point for world markets right now. Almost everybody who's anybody right now and is a global watcher is talking about what the Italian markets could be doing and the resultant impact that could come about for the world markets by and large. So the Italian bond yields at 4-year highs, Euro has hit the lowest and USD has hit the highest levels for 2018. Remember, day before yesterday, Turkey hiked interest rates by 8.5% to 16.5%, and which is a steep hike coming in from Turkey as well. So all across the markets, there is some hint of an intermediate flight to safety. I'm not trying to sound alarmist, but there is quite a bit of a quick motion that's happened in a clutch of world markets, and all of that should worry investors as well. And which is why if you see the world markets yesterday, one, what the European markets did, to what happened to the US markets overnight as well. Let's just bring those indices up on the screen. What Europe did, what the US markets have done, and what the SGX Nifty and the Asian markets are showing right now. It's all looking red and not a pretty sign if you are indeed a bull. Let's see if this gets exaggerated or whether we stem the rot right now, but it's honestly very difficult to say. I know a lot of people are saying that this too shall pass and we will not have further pressure, but I think it's a bit of an unknown situation for the near term because there are a clutch of factors that are impacting the markets as well. Our markets, for example, I think the European political uncertainty did arrest Nifty's ascent, 3 days of gains, and then the Nifty pulled back a little bit in yesterday's session. IT stocks bucked the trend and the rupee depreciated about 0.5%, but that's just some solace for somebody who was long otherwise. But there was long unwinding seen in Nifty Bank as well. Open interest was down about 9%. So it did show some chinks in the armor yesterday. The PSU banks showed that. The global banks have showed that. Let's see what happens today. In terms of stocks to watch, strong results by Himadri Specialty Chemicals as well as Dish TV optically look good. Let's see if these stocks react in the session today. Glenmark Pharma, I'm sure Darshan will be able to speak more about it. They've set up some committee to assess the feasibility of housing the API and the consumer care business in a separate entity. The quarter looked by and large slightly weak. Let's wait and watch what happens there. GNFC, while they've given their clarifications saying that it was a minor one, it was contained, etc., but this repeated gas leakages will not augur well for a stock that is looking fairly solid on the earnings front. Let's see if there's a reaction to this stock in today's session or no. And two interesting bulk deals, and the reason I say this interesting is ICICI Prudential is known to buy distress and ride the wave only to emerge triumphant. They've done this in the past with metals, they've done this in the past with telecom. ICICI Prudential MF have now very tiny stake. They bought into Tata Motors DVR. Let's see what happens to this one, if anything, in today's session. Vardhaman Textile, small name, but HDFC MF has bought about 1% stake. Let's see if this one reacts a bit in the session today or no. But Today on First Word, it's a lot more global than what's happening on the local front. We speak to Mitul Kotecha of TD Securities to find out what he makes of a looming debt default by Italy and its impact on global equities. Actually, the whole European picture, to be honest. Darshan and Johnson to fill us with what Fortis Healthcare wants its suitors to chalk out when they put in their bids this time round. What is this CBI probe against AirAsia India? Sajid Bangat Johnson to give us those details. And finally, we do some analysis, as we've been doing almost every single day for the last few. Lux Industries has outperformed its peers this year, but do the fundamentals support such a run-up? And what happens to that entire space? There is Lux, there is Dollar, VIP, Page, Agam Johnson to tell us more about how the numbers are looking like currently. Okay, nearly a decade after the protracted Greek debt crisis spooked global markets, there is a fresh round of political turmoil in the pig's nation, if I can use that term. At least Italy is showing that. It's revived fears about the fate of the European financial system and its common currency. Italy may be headed towards snap elections as early as July after the latest attempt to form a government has failed. The worry now is that the repeat elections could turn into de facto referendum on Italy's membership of the euro. Jody Schneider of Bloomberg News has the latest.
Prime Minister Delegate designate Mr. Cottarelli wants to form a government. He says this is not, this is not off the table. He just needs more time. Yet, of course, the opposition parties, the anti-immigrant League and the anti-establishment Five-Star movement have absolutely no incentive to help him form a government. As a matter of fact, they want elections as soon as possible. Yesterday, at this time, we were talking about elections maybe in September. Now it could be as soon as July. If he can't form a government and they have to dissolve it, they have 60 to 70 days, and that would bring it to July, which is, of course, when those other parties want to see a vote, which would effectively be a referendum on leaving the Eurozone.
Meanwhile, well-known investor George Soros has said, and he's, of course, talking about the surging dollar and saying that the surging dollar and the capital flight from emerging markets may lead to another major financial crisis, and has warned that the European Union that it's facing an imminent existential threat. Listen in.
An existential crisis is no longer a figure of speech, but the harsh reality. Europe needs to do something drastic to escape it. It needs to reinvent itself.
Okay, let's also listen in to what Morgan Stanley's Chetan Ayya has to say.
I guess the way it transmits it through financial conditions, we can see what is happening in global financial markets. We are seeing the credit spreads widening in Europe as well as in US, and to some extent we've seen that to begin to happen in Asia too. So I think the concern is that whether this is going to broaden out to the rest of the world in terms of financial conditions and then on to the economy. So that's how we economists are watching this development.
Do the fundamentals of some of these economies provide some level of comfort further on? Are we getting overly excited or depressed by the political machinations that are unfolding there?
That's right. I think the fundamentals in Europe are different. The fundamentals in EM broadly are different, and fundamentals in the rest of the DM are also in a much better shape this time compared to what you were going through in 2011, or even for that matter for emerging markets when what was going on in the financial markets during 2013. So I think the backdrop of EM and DM balance sheet and fundamentals is much more different. So we should be able to absorb this tightening of financial condition and not have a major derailment of global growth outlook. But clearly we'll have to see what exactly pans out in Italy over the next 2-3 months.
What options do you think the ECB has in light of what's going on?
Well, I think the ECB's focus should be, or would be probably, to see what is happening to financial conditions in Europe more broadly and the impact of that on broader growth environment in Euro area. And eventually, when things look like they are probably going to impact the broader market conditions as well as economic outlook, we would expect the ECB to come out with some response which addresses that risk.
Okay, now that's a bunch of global voices. Let's discuss the implications of this in greater detail with Mitul Kotecha. He's Senior Emerging Market Strategist at TD Securities, joins us right now on the show. Mitul, really appreciate you taking the time out. Thanks so much for joining in today. How high a significance do you give this latest round of turmoil in Italy, this no confidence motion that is likely to come up in Spain on Friday as well, to percolating into any kind of crisis in the near term?
Well, I mean, I don't think this is going to lead to a crisis, but I think certainly the fact that this has escalated into something quite significant in recent days, both, as you say, in Spain and Italy, has led to a rise in risk aversion. Obviously, we've seen a real widening in Italian bond spreads versus bonds. Euro has come under a great degree of pressure, and there does seem to be greater contagion to other markets outside of Europe. So clearly, this is resulting in widening risk aversion. Yet, in terms of crisis, I think obviously we're still a long way from what we can say has been previous crises, but certainly I don't think this is going to end anytime soon.
Okay, that was probably my main question. We have Italy under turmoil. Turkey has done something which we haven't seen for a while now in terms of the quantum of rate hikes. We already know what's happening at the LATAM area as well. Does this have isolated impact on those markets, Mitul, on currencies and bonds and thereby the other asset classes, or does it percolate into broader risk aversion for riskier asset classes by and large?
Yeah, I think already some of this is, as you say, percolating into a wider spread of contagion. Until recently, for instance, pressure in Turkey has been very isolated. Other emerging markets have not come under anywhere near the same degree of pressure. In fact, there is a broad degree of external pressure on EM that's been due to higher dollar, higher US yields, markets pricing in greater Fed rate hikes. This is added to pressure on emerging markets, but certainly some countries such as Turkey have been under particular idiosyncratic pressures. Now, Italy you can add into the mix now, and of course Spain. So there is a broader degree, as I said, of pressure that's building up. I think that contagion risk is increasing, but it's still early days to say that this is going to suddenly lead into something greater and perhaps an increase in near-term volatility and risk off for markets. And it may be a prolonged period of uncertainty. It doesn't seem like the Italian political situation is going to be resolved anytime soon. There may even be elections as we go through the next few months. But clearly that will provoke more volatility. But as I said, I don't think we're at a point where we can say this is a crisis situation.
So Europe, by and large, Mitul, if we hear Indian corporates who export to Europe, they've been talking about how the order flow from that geography has actually been strong because European economies, by and large, seem to be stronger than what they were. My question to you, therefore, would be, as an EM strategist, do you believe that if there turns out to be a slightly worse case scenario in Italy, Turkey we already know is under turmoil, would it result, and LATAM doing what it is doing, would it result in a risk off from EMs into the stronger European economies and the US, which is also showing signs of strength? Or do you believe that there will be stronger economies which will be ring-fenced from all of this?
Well, I mean, I think if we look at EM as a whole, for instance, there has been an improvement in fundamentals in recent years. Emerging markets have been bracing for Fed hikes now for some time. So reserves, in terms of FX reserves, in terms of growth outlooks, have all improved. So there is a stronger base here. The vulnerabilities of emerging markets that we've been seeing in past years has effectively dissipated, apart from a few instances, and again, as you say, Turkey, for instance. So I don't see that turning into something that results in a widespread outflow from emerging markets, for instance, into stronger markets elsewhere. And Europe, for instance, is currently not looking like a safe haven where you're going to see these type of flows move into Europe. If anything, given the uncertainty in Italy and Spain, Europe itself has become more of an uncertain, or the outlook for Europe has become more uncertain, even as growth has been holding up. Clearly, this is something that will raise some near-term uncertainty for investors, and as you say, for for anyone that's looking to sort of look at European growth, that's certainly still holding up well. But I think the uncertainties around the volatility on the currency and on bond markets in Europe, and that's going to continue.
Okay, Mitul, one quick question on the currencies as well. Dollar strengthening against almost all baskets, yesterday against the euro as well. If you track the INR, we've been weak for the last few days, save for a bit of a pullback because of the oil pullback too. What's the near-term outlook on the rupee?
I think rupee still is vulnerable in the near term. There's certainly, again, any country in EM with current account deficits is going to be vulnerable to any reversal of capital flows. And India, I think, in this environment where there is focus perhaps on India's twin deficits, current account and fiscal, means near-term vulnerability will continue. I don't think it's going to be a sharp weakening in INR, but certainly don't see an immediate strengthening in the coming weeks.
Okay. Mitul, really appreciate you taking this time early morning and talking to us at Bloomberg Quint. Thank you so much.
Thank you.
That's Mitul Kotecha. Doesn't believe that this will escalate into a full-blown crisis in any fashion whatsoever. And in fact, ring-fenced or stronger EM economies as well could well withstand the pressure that may come in because of the Italian situation. The only key takeaway is that it's not necessary that this will pass off anytime soon. This may well stay and linger on and keep on bothering asset classes over the course of the next 3 or 4 months. We told you at the start of the year that volatility is going to be there. This is one sign of that. Okay. That is as far as the broader markets go. Now to specific stories, 2 or 3 pockets that we've highlighted in First Word. Firstly, Fortis. 3 months after it all started, it's back to square one. The board has decided to invite fresh tenders for the proposed takeover of the company. The country's second largest hospital chain said it is seeking new bids from all interested parties, and the Berman Munjal offer stands terminated. What's also changed is the clear roadmap that needs to be submitted by the bidders this time around. This includes an upfront preferential investment in Fortis and a proper plan for SRL and RHT. Darshan Mehta joins in with the details. We also have Sajit Mangat on the table for another story, but he's tracked this one very closely as well. So let's all jump in on this. But Darshan, to you first.
Yeah, so basically what happened, I think post the EGM, it was very well known that, a new suitor will come in because the old shareholders which had bid for the Hero Group, they were out, and the new ones were opposed to it. So once the Hero Berman consortium wrote to Fortis saying that they're okay to a fresh bid coming in. Yesterday Fortis, while market was just closing, came out with a circular saying that now a new bid will start. So what they've done is the 3 people who are most active, that is IHH, the Hero Group as well as Manipal, they have invited them to give bids, but they've also kept it open for others also. So they are saying that they've invited 3, but the others can also bid. Now the deadline is tomorrow. So till tomorrow they have to give an expression of interest. Now once they give the expression of interest, Fortis will announce, by June 1st, who are the parties that are shortlisted for the entire thing. Now, once you are shortlisted, you get 2 things. First of all, you get 10 days of due diligence on the financial side and on the litigation side. And secondly, an interaction with the management to understand what this is. So this is what you get. Initially what happened is people could give any bids. Now, Fortis has put in a list of criteria which you have to submit for that bid happens. First of all is that the minimum investment into the company via preferential allotment has to be 1,500 crores. So that's the minimum bid. Secondly, plan for how they plan to do the funding of RHT, because Fortis has to buy that out. Thirdly, they have to give a plan of what the plan is to give the PE exit from SRL. So that is another thing. Bids have to be unconditional, no conditional deal. All of them have to be unconditional unless there's some regulatory approval that is needed. They also have to tell what is the source of funding. If they want to bid for Fortis, they have to tell what is the source to fund this entire deal, and plan of retention of the current management and employees is also be. So these are the 6 requirements that Fortis has given that you have to give. Now, between June 14th, between 8:30 and 9:30, these bids have to be submitted, post which, Fortis will decide what it is. Now, Fortis has given the evaluation criteria based on which they will select. The first criteria they are saying is that the valuation is important, the quantum of investment is important. So that's the first criteria. The second criteria is that the plan to address the long-term and short-term requirements of Fortis regarding even SRL as well as RHT. So the entire plan has to be given. The bidders value the vision for the company and what value they are creating for shareholders. And finally, the simplicity of the deal and the timeline. The reason I think they're putting simplicity because the Hero deal was simple. The Manipal deal was time-consuming. IHH lost out because of due diligence. Now they're putting all the criteria in place. This is the minimum what we require. Whatever additional you give is fine, but I think post June 14th we'll come to know who the new owner of Fortis is.
Okay, so quick 30 seconds. Would this by and large be better from a perspective of a minority shareholder who wants to hold on to Fortis?
Yeah, it is because now there is more clarity. Initially people were bidding left, right and center with their own bids. They were see what happened was initially the bidders were commanding what they want. Now Fortis is saying I want this. Give me this, and plus whatever better you can give me.
Okay, cool. Sajid, quick 30 seconds, yes.
But I feel that, the valuations may not be different from what many of the bidders have already given. Remember when Manipal TPG came in, they valued Fortis at around 4,500 crores. Now that has gone up to 9,000 crores. Now beyond that, it's unlikely that any of the bidder will go in. So it's the kind of structure which we'll need to look at before
I think that's what Darshan is trying to say as
so
well.
the board will finally look at the structure, how simple it is, how fast the money will come in. All those things will matter because valuation now is almost peaking for
So
Fortis.
all of them bid anywhere between 160 to 180.
180.
So that was the range,
Exactly.
and I don't think anyone will have a problem. The reason that IHH got it is because it was a the Hero got it was because it was a smoother, simpler transition, no change of shareholding as much, less dilution. So that worked for them. IHH was indeed a good offer, but asking for a due diligence probably may have cost it, and Manipal was very, very complex.
So to sum it up, it will be a lot more comparable offers compared to what it was in the past. Great. Okay. Darshan, thanks for putting that into perspective. I'm 8:21, need to move on to the next piece of story, but thanks for putting this into perspective. The next piece is what happened yesterday, which is that the CBI has named some key functionaries of AirAsia India in an FIR filed yesterday. The one name that stands out of that list is Venkatraman Ramachandran. He's the close aide of Ratan Tata. It's especially curious since Cyrus Mistry, who was unceremoniously removed as Tata Sons chairman, did name him in some of his letters sent to the Tata Sons board, accusing him of corporate misgovernance. Sajid Mangat's here to tell us about the importance of what's happened yesterday. Sajid.
This is the genesis is from the Cyrus Mistry exit. In the letter of October 25th, Mistry had laid out what is happening in various Tata Group companies, including AirAsia, where he spoke about a forensic audit which revealed that fraudulent transaction worth 22 crores was done with sham contracts, and audit was undertaken by Deloitte. Now the CBI has taken it forward from there. What CBI is basing the entire FIR, which it filed 2 days back, was based on source information. CBI did not disclose who the source is, but it's well to assume that from the entire Tata Cyrus issue that happened, a lot of stuff would have come in and CBI would have looked into it. But the main contention is this: one, AirAsia Malaysia, which is Tony Fernandez and his crew and his management, was controlling AirAsia India. Now, as per the FIPB norms or FDI guidelines, a foreign airline can own only 49%, and it cannot have operational and control of the domestic airline. That has to rest with the Indian partner. What CBI is alleging is very clear, that it's saying that they have a brand license agreement between AirAsia India and AirAsia Malaysia, which allowed AirAsia India to be operated as subsidiary of AirAsia Malaysia, which is a violation of the FDI guidelines. So that's one. The second allegation they have is about lobbying and paying bribes to government officials in Ministry of Civil Aviation and FIPB, because AirAsia wanted to go international from day one, which would mean that they would have to change the 520 rule, which is 5 years of operation and 20 aircraft as fleet before you can fly out from India for any Indian airline. And that was they wanted to change that rule, and they wanted the Indian partners to lobby with the government to change that rule. And Venkatraman Ramachandran, who is also a trustee of Tata Trust and a trusted lieutenant of Ratan Tata, who was the director on the board of AirAsia India, was given the role of liaising with the government to change that rule.
Sure.
There has been the CBI also goes on to say that at some point in time there was some money was also transferred from AirAsia India to some entities held by Deepak Talwar and Sunil Kapoor. Now these are lobbyists who are based out of Delhi, and this money was used to bribe officials of Civil Aviation Ministry and FIPB. So it is a ongoing probe. It actually brings in the entire FIR on the doorsteps of Tata Sons, because now, though Deloitte report has indicated that there was some fraudulent transactions, and there was a case filed by the AirAsia India against the former CEO for these transactions. Now it comes into the entire picture, because the CEO's name, former CEO's name, is not there in the FIR. It's only Tony Fernandez, his deputy CEO, and the Venkat's name are there, apart from some of the entities which are dealing with it.
There are probes and there are probes, and then there are certain probes which evoke a response which is beyond what just the probe does to one particular entity. By the way, more on this story you can get on our website as well. But
yes,
this is important for more reasons than just one.
It is important for more reasons than just one, because it's a leftover of the Cyrus mess, which now Chandra will have to handle. They are getting into airline, and AirAsia India is a loss-making entity. Now, going forward, they have to be very careful of how they're going to deal with this. Remember, this 520 rule was changed when the Modi government came in.
Yeah.
It was about to get changed when the election commission announced the election, and they couldn't do it. So the day cabinet was supposed to meet and change it, the election commission announced dates, and so the election code came into being, and they couldn't do it. So it happened in 2016, going after 2 years. But still, it's something which will have a bigger ramification if they are able to prove that money was indeed given, bribe. So everyone knows that in the airline industry, lobbying happens.
Yes.
But how they are able to pin people is something which we're going to say.
Yeah. Sajid, thanks for putting that into perspective, and trust me, viewers, for more on this story, visit the website. Sajid has spent quite a few hours yesterday, I've seen that, filing this story. It's a very nice article, gives you the entire update about this saga, if I can use that term. Do log on and read up more about this story. Thanks, Sajid. Okay, more on first word, the last piece, in fact, and that's on the underclothing and the undergarments industry. For all the fans of Page Industries, well, it's Lux which has outperformed the underclothes pack this year. The question mark only is whether the fundamentals are too strong as compared to the peers. Have Lux's valuations run way ahead of the fundamentals? And what about the others? It's not just about Lux, is it? Agam Vakil has put together a comparison. Agam, good morning.
Good morning, Neeraj. It's a little bit like a celebrity wars, but the reason why Lux came into my radar right now was because of the outperformance that you've seen on a year-to-date basis. And I was really curious about the dynamics of the industry, the fundamentals about what's going on, and how does Lux stack up against several of its other, big players and big peers. So as you can see here on a year-to-date basis, it's certainly outperformed, a lot of its other peers by quite a mile on a year-to-date basis. Of course, the largest player in the industry right now is Page Industries, and it is also the premium player, but I'm going to talk about that a little later on. Let's take a look at how these companies have done in terms of your performances, and as you can see, Page Industries clearly is leading in terms of revenues. It has the largest revenues. It has substantial operating margins, much higher than some of the other guys like Lux, Rupa, as well as Dollar Industries. And similarly, when it comes to the top line growth over the past 3 years, once again, it has surpassed all these three players. All right. So based on this, something clearly has changed for Lux Industries to come in and see that outperformance, even in compared to something like a Page Industries. So let's bring up a few factors that are changing things for Lux Industries. The first one, and perhaps the most important one, is that they have started to focus on your premium segment. Page Industries, of course, is into the premium area through Jockey, and that's the reason why Lux is also starting to shift, and perhaps a lot of investors are starting to see value in that, and that's the reason why we're seeing that up move in Lux. Of course, moving in, when we consider the way we've seen your growth story come through, the entire industry is expected to grow anywhere between 23 to 31% according to various brokerages. So Lux, of course, will have that advantage playing out. Now, in terms of returns and valuations too, Page Industries naturally currently enjoys that premium in terms of your EV to EBITDA, or for that matter, your price to earnings ratio, because of your high return on equity. That is not the case for Lux Industries, but Lux Industries is certainly doing much better than Rupa and Company as well as Dollar Industries, despite the fact that a lot of its other variables are comparable to Lux Industries. So Lux is right in the middle of this particular sector. That said, there is coming down to your ownership, why Page Industries stood out for me, and while it perhaps also enjoys a certain scarcity premium, is that while 49% for Page Industries is owned by promoters, another near 36% along with another 5% is with institutions, which means only 10% of Page Industries is with the public, that is the non-institutions and non-promoters. And that's the reason why we really don't have too much in terms of Page Industries that's out there in the markets in terms of free float. Of course, Lux Industries, it's not too far behind, still 74% owned by promoters, but when it comes to institutional ownership is not that high. When it comes to something like Rupa and Company and Dollar Industries, of course, these things vary, but Rupa Industries again has that promoter holding of 73%, not unlike Lux Industries. So it's quite clear from here that Page Industries also enjoys that scarcity premium coming through this. And don't forget, we have already gone through a lot of these variables which are far superior in compared to the other three guys. So moving in, there are a few questions that I'm asking. Can Lux shift its product mix enough to match the high margins that Page Industries is enjoying right now? The second question is that when it comes to Lux Industries and Rupa and Company, the valuations right now are not matching. So can we expect then Lux to correct to a certain extent, at least in the near term? And the final one is on Dollar Industries. Will that manage to move up in terms of premiumization so as to match some of its other peers? And these are the questions and these are the answers that will eventually emerge over the next perhaps the next couple of quarters or perhaps the next 1 year. But for now, these are some of the variables that have pushed Lux higher, and also a reason why Page Industries actually enjoys that premium in comparison to several other players.
Yeah, well, Agam, thanks for putting that into perspective. Clearly, this year has belonged to Lux Industries, but Page, by no means something to scoff at. Agam put all of those numbers into perspective. Viewers, remember, if you look at the last decade, Page Industries' earnings have compounded 32% CAGR. 32% CAGR for the last 10 years is nothing to scoff at, which is why these premium multiples for Page Industries. But Lux this year has clearly been the winner. Bit of a catch-up out there. Agam, thanks for putting all of that into perspective. That's all that we have on First Word today, though. But later on, we decode the fourth quarter earnings with KK Modi of Godfrey Phillips and PV Ramesh of REC. That's coming up at 9:30, and then talk about a bunch of other market views with our experts on the other side of this very, very quick break. Stay tuned.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
You have to chase the value. What market is reflecting is change in the value. It is because of value migration that you keep seeing the new businesses coming up, new companies coming up. Value migration by Adrian Slavetsky. It is a wonderful book by a professor from Harvard.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open on Bloomberg Quint. Let's see how the Asian markets are faring at this point of time. Not good at all. The Nikkei is down almost 1.8%. Shanghai markets are down 2%, and Hong Kong markets are down 1.6%. We too have reacted negatively, down 75 points. But let's take a look at what's happening on the F&O space. And Agam, today the call writers will have a field day, 75 point down on the Nifty. Probably will even open gap down much more on the Nifty once it opens. What are the F&O cues indicating?
Right, you're absolutely right, Darshan. Some weakness did seep in yesterday, and that is expected to play out today as well. The rollovers, of course, have picked up, but the real question is, should we see a day of weakness today? Can we expect this rollover number to move up higher? Well, that's an answer we're going to wait and watch out for. But for now, as you can see, a 30% rollovers for Nifty, another 30% rollovers for the Nifty Bank futures as well. And we have seen the India Volatility Index will remain largely flattish, but this can move up going into tomorrow. And in terms of the Nifty put call ratio, which has fallen down to around 1.39, let's see whether or not this can also see a substantial change. Now, in terms of changes in open interest, what we saw yesterday was unwinding in the 10,500 put, and should we see the index move down further, there is a likelihood that we could see more unwinding coming through around the 10,400 and 10,500. Of course, more writing was also expected around the 10,600 and the 10,700 mark. In terms of stocks, two stocks which move into the band, JP Associates and Just Dial, expected restricted trade there, and two stocks which moved out. That's one of them is Reliance Communications, and the other one, well, they'll come up on your screen, is Gen Irrigation. And two other stocks that I'm also watching out for. One on the long side, which has seen fresh buying, NIT Technologies, and one on the short side, which has seen some weakness come through. That's Just Dial, as you can see, addition towards open interest across various series. So we are watching out for these, and of course the benchmark indices, which are likely to see some weakness in today's job trade.
Okay, that's what's happening as far as the F&O space is concerned. Neeraj, I think the start will be pretty rough this time around. If you see, take a look at what the numbers that came out after market hours. The numbers of the weak set, far outperformed, the strong set or an inline set of numbers. So these are the counters that probably will react. Glenmark, a horrible set of numbers came in from Glenmark. The commentary also not looking very, very encouraging. So that was rather weak in trade. You had Bharat Electronics, after BEML's weak numbers, Bharat Electronics came. So I think this entire defense play that everyone was saying that actually isn't delivering the numbers. Pharma has been rather weak. I think the only exception has been, Sun Pharma or probably a Cadila, but apart from it, the entire pharma space has been reporting weak set of numbers. Coal India is the other one that probably, I think the market took it the wrong way yesterday. There was no more clarity that came in on the numbers, but I think the numbers were not bad because the realizations and volumes also increased significantly.
Marginally below estimates, maybe. I mean, I was just looking at what Nikki told us about what the reported numbers look like, and apparently missed estimates by a whisker, so that could be interesting as well. But so much to talk about, Darshan, those basic numbers that you spoke about and a lot of other things that our research hunter will bring out for us.
Yeah, so let's go across to them and we'll come to know what exactly is the update. A lot of companies came out with numbers after market hours. The last nifty company of today, of this earnings season, is ONGC. So let's see what ONGC has in store and what are the stocks that we need to watch out for. We'll ask our colleagues here. So let's start with the stocks in news first. That's important. Agam, what are the important stocks you watch?
So we have a surprise cut from Indian Oil Corporation that's going to remain in focus, considering we have seen some of these OMCs which have been buzzing on the back of the upward movement in fuel prices. But some of the other media agencies reported that the promoters of Jubilant FoodWorks are looking to sell more stake in Jubilant FoodWorks, and Jubilant FoodWorks has come ahead and denied any of these reports. So it would be interesting to see how Jubilant FoodWorks opens in trade and perhaps reacts through the course of the day. Interglobe Aviation announces fuel surcharges to counter the recent upward surge in oil prices, and we also have RSWN, which will be in focus, which is to close its manufacturing unit in Tamil Nadu. And finally, GNFC and clarifies they're on a gas leak in the TDI plant in Dahej, so we could expect some sort of a reaction there as well, and we'll have to watch for more developments on the remedies out there.
Okay, so these are the counters that we'll watch out for. Jubilant Food in particular, it was down 6% in trade, but Yatin, a lot of companies came out with numbers after market hours. Which were the strong ones?
If you look at the brokerages on M&M, I'll talk about that. And we have CLSA, which maintains a buy, with a target price of 1075. The target has been raised from the level of 960. We have Mahindra & Mahindra, which has given a strong guidance as far as the entire volume picture is concerned. So that is one stock which has been in focus. We also have the MPV segment, which will see some new launches, because of which we could see higher sales volume. CLSA expects a 18% EPS CAGR over the next 2 years as far as M&M is concerned. Also Credit Suisse, they have maintained outperform. They raised the target price to 1030 from 970. They say that strong FY19 outlook across segments is something which will remain a focus point as far as M&M is concerned.
What about you, Nikki? Which are the numbers that came out after market hours?
Bunch of earnings, weak earnings that we're tracking. First up is Dish TV. On the face of it, looks like strong numbers, but then if you compare that with estimates, weak show there. Revenue up by more than 100% at 1,532 versus estimate of 1,612. EBITDA is up by 102%, but then again lower than estimate, impacted mainly on account of Reliance Jio free data and free dish impact, which is weighed on the performance of the company. Naran Hridayalaya, again a weak set of number reported by the company. Revenue is up by 34%, but we're seeing a decline coming in on the bottom line performance of the company, as much as 54% downtick. EBITDA has come down by 13% year-on-year basis for this company. Third up in the list, we have Eveready Industries, where the company has reported a 15% uptick in the top line number, but then we're looking at a net loss of 16 crore as compared to a profit figure in the corresponding quarter. Higher employee cost along with the advertising spend, which have significantly increased in this quarter, have weighed on the margins of the company. Greenply Industries, weak numbers, revenue down 2.6%. The weakness creeps in from the top line itself. Net profit down 22%. EBITDA for this company is down by 22%. Lower realization in plywood along with the losses in wallpaper and other categories have weighed on the performance of the company. Bharat Electronics, last set of number that I'm talking about is a weak show there. Revenue down by 9.5%. Net profit has fallen for this company. EBITDA too has declined for this counter. Lower other income has dented the financials, while we're seeing higher tax outgo, which has weighed on the bottom line performance of the company.
Okay, and Somit, ONGC, the last Nifty company, come out with numbers. What can we expect?
So you can expect a strong quarter from ONGC in the fourth quarter of financial year 2018, purely on the back of higher commodity prices. Now, if you see the headline numbers, the revenue is expected to be higher by close to 7% to close to 24,520 crore rupees, while the margins are expected to expand to around 53.6%. EBITDA is also expected to be higher by around 20%, while net profit is expected to be higher by around 30% to close to 6,543 crore rupees. Now, the net realization of that is expected to come in at around $66.3 per barrel, which is expected to be the highest in the last 13 quarters for ONGC. Now, the quarter was aided by higher crude oil prices. Now, Brent crude, that is the Asian benchmark, averaged around $67.22 per barrel versus $61.4 per barrel reported in the last quarter. Now, on the operation side, if you see, the crude oil and gas productions are expected to remain flat at close to 6.5 million metric tons and 6.2 billion cubic meters in the fourth quarter of financial year 2018. On the financial side, if you see, the subsidy burden is expected to be nil, while the depreciation, depletion and amortization cost is expected to be higher. Other income is also expected to be higher for the company because of higher dividend income, because the company has received dividend from HPCL and Indian Oil Corporation. The company received a dividend of close to 3,700 crore rupees from HPCL and Indian Oil Corporation in the fourth quarter. However, some of this higher other income will be offset by higher interest costs, because the company had taken a debt of close to 31,000 crore rupees to repay government, to pay for government for the HPCL acquisition. Lastly, key things to watch out for would include oil and gas production volumes, development plan of KG Basin, capex guidance that the company gives for financial year 2019, clarity on funding of repayment of the debt that the company has taken for HPCL acquisition, and any clarity on subsidy burden, if any, because the petroleum subsidy was kept low in this budget.
Okay, many thanks for that, Somit, Nikki, Agam and Yatin, for giving us more perspective on which are the stocks that you need to watch out for. Neeraj, I think no doubt the stock of the day probably will be, despite the promoter denying, will be Jubilant FoodWorks. The counter did manage to correct significantly. I think it's important we ask a technical analyst also what they believe is the perspective that they have on Jubilant FoodWorks. Do they believe that there could be, this denial could bring a bounce back, or probably there could be more selling? That's what we need to ask them also.
Yeah, let's do that. In fact, start off that conversation with our technical experts first. Chandan Taparia, Associate Vice President at Motilal Oswal Securities, as well as Gaurav, Bissa, Assistant Vice President at LKP Securities. Both of them join us on the show, and we will talk to them about Jubilant and a few other stocks as well. But start off with their quick outlook on the markets currently. Expiry week always tends to be volatile. We are likely to start off, due to global cues, Chandan Taparia, a bit lower today. How would you approach trade? We'll start off about 0.5% or thereabout lower. Would you initiate any trades at those levels?
Yes, first looking at the expiry to expiry basis, last expiry settled at 10,613, and this expiry as of now, yesterday the closing was 10,633. So on expiry to expiry basis, we are almost flattish, and expecting market to consolidate here only. We have seen the significant call writing and put writing at all the strikes, and volume weighted average for the entire series comes near to 10,680, so that is likely to act as an immediate hurdle. But at the same time, in last 2-3 trading session, we have seen put writing at 10,500, 550, 600, so that is likely to act as a support. So for me, as of now, expecting market to remain in a range between 10,535 to 10,635, 650 zone for next 2 trading session. And if it comes to the lower band of the trading range, then some bounce back again could be seen, because earlier some put writing was seen at 10,600, and market will try to attempt and recover towards 10,600 by taking support near to 10,535 kind of level. And talking about the Bank Nifty, we have seen call writing, put writing all at 26,000. Bank Nifty is trading higher than its volume weighted average. Net to net Nifty is flattish, but Bank Nifty is up by around 5.5%, and 26,000 is likely to act as a major support for the Bank Nifty, and expecting expiry to settle near to those levels for Bank Nifty per se.
Okay, Gaurav, Bissa, what about your thoughts on the index? We'll get to specific stocks, but the index by and large, and the Nifty Bank, which corrected quite a bit yesterday. How would your trading approach be to those two indices today?
Good morning. For Nifty and Bank Nifty, I think a good part has been explained by Chandan beautifully. But what I would like to add is that if you look at the option chain, today we have seen, in last couple of days, we have seen some amount of short covering 10,500 put option. Now that has been acting as a strong deterrent. We have seen a bounce back coming from those levels. People are comfortably selling 10,500 put options. So the fact that we have started to see covering happening, there is a possibility Nifty might slip towards level of 10,500, 10,520. So for me, the trade would not be to buy in the open. I would not be buying if Nifty opens at 50, 60 points lower, because then again we'll be hovering around 10,560, 570 levels, and not a very comfortable level to be long into. But any dip towards 10,520, 525, that can be bought with a stop loss of 10,480. I think we can have a strong bounce back coming in. The Nifty can rebound towards level of 10,650, 680 from those levels. So I think the ideal strategy would be to wait for a time being, let the market stabilize, and dip towards 10,500 should be bought. For Bank Nifty, the immediate supports at 26,000, 25,950 sort of. A good amount of concentration is seen in 26,000 put option for the Bank Nifty, and any dip towards 26,000, I think that can be bought. Have a stop loss of 25,900 and a bounce back towards 26,353, 26,400 can be seen. So I think Bank Nifty would be more lucrative trade. It has a high volatility component, and I think it can rebound quite strongly. We have seen Bank Nifty has been underperforming Nifty for the last couple of trading sessions. So I think Bank Nifty is a more lucrative trade near 26,000 levels.
Okay, Bank Nifty is the more lucrative trade, but clearly the outlook volatile at best, slightly tough volatile at worst, slightly tough at best. Let's wait and watch what happens. Before we get to some specific stock recommendations from our guests, it's 8:50, so time of the show wherein we move to our special segment, Bloomberg Edge, wherein Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock or an asset class. Jayesh, what's on your radar today?
Morning, Neeraj. I'm watching out for WTI crude oil prices. That is because in the last 4 days, we have seen a sharp sell-off of more than 6%. And the chameleon indicator on the Bloomberg terminal suggests that this selling could be over and we could see some bounce back as per the indicator. Let's have a look at how the indicator actually works. Well, it's a combination of 3 indicators that it actually follows, which is the stochastic RSI and the Bollinger Bands. What it does is that there is a theoretical value that is calculated, and the maximum that you can go to is from -6 to +6. So that's the limit that you have on a theoretical basis. If you have a look at the conditions that you have to watch out for, it changes color from bright red to bright green and the other way around as well. So bright red is indicative of overbought conditions and bright green is indicative of oversold conditions. And that's exactly what has happened on the chart of WTI. That's the last 1 year chart of WTI. Now, bottom panel shows you the chameleon indicator, and if we can zoom into this, you'll see how the color has actually changed. And currently, it's at about -5. In the last 1 year, there have been only 2 instances when this has actually happened, which is sometime in the month of Feb and last June that we saw. And post this, we saw a sharp pullback on oil prices. So, the limit has not been breached, but it's currently at -5, and in the last 1 year it has not breached this levels, and every time it actually did this, there was a bounce back in oil prices.
Okay, many thanks for that, Jayesh. We'll certainly watch out for how oil is there. But let's get back to our technical analyst and find out which are the stock picks that they have for us today. Gaurav, you go first. What are you recommending for today?
I have a buy and a sell recommendation looking at the markets. I think with the kind of volatility that we are seeing right now, it would be prudent that one sticks with the more stable names, low beta names. I think one of them is Bharti Airtel. It has seen a good bounce back from 366, 370 zone, and now some addition has been seen in the OI side. 380 call option had seen good amount of writing. It's just about close around those levels. If 380 were to held, it can head towards, or it can hop towards the level of 390, 395. One can have a stop loss of 373 by Airtel futures for target of 390. 380 to 390, and second would be a sell call on Bajaj Finance. We have seen that after a dream run in Bajaj Finance, Bajaj Finserv, and many of the other stable names, they are now seeing good amount of long unwinding at high levels. It has been trying to cross the levels of 2100, but to no avail. It has a strong support 2070, 2075, close around those levels, and once it trades below these levels, a 3 to 4% quick downfall cannot be ruled out. One can play for targets of 2030, 2040 and have a stop loss of 2095 and sell Bajaj Finance futures.
Chandan, what about you? Your ideas for the day?
Yeah, first is buy on Dabur. The stock is given a breakout from its pole and flake pattern, made a new lifetime high after the consolidation of last 13 to 14 trading session. It is up by around 8% in this entire series, and we have seen the good amount of longs being added in the counter. Rollovers are also attractive, expecting total 78 to 85% kind of rollover from May to June series. So that suggests that positive momentum could continue even into the next series as well. So recommending to buy with a stop loss of 377 and expecting it to move towards 400 kind of level. Second trade is sell on Titan. This stock is started to form lower top, lower bottom formation. It has remained consolidative in last 4-5 trading session when market recovered, and yesterday it fell down. It is taken support at its 50-day resistance at its 50-day exponential moving average, and a couple of days back it has given the breakdown from its support trend line, and the same is working as a resistance trend line. So all these signs are giving the hint for the negative stance. So we are recommending to sell with a stop loss of 930 and expecting it to go towards 882 to 875 levels.
Okay, Vinit Bolinjkar, Head of Equity Research at Ventura Securities, joins us right now on the show with his thoughts as well. Vinit, good having you. Thanks so much for joining in. I'm starting off with some of the results that have come out, Vinit. Darshan was talking about how Glenmark, the performance as well as the commentary on US pricing has been very, very weak and wobbly. What did you make of that? And what's the outlook, therefore, on the stock, if you cover it?
So, across the pharma board, we have always been saying that pricing is going to be under pressure, and that is being ratified by every management that has come on call. First, it was Sun which said that despite the resolution of Alone, there would be generic pricing, and now with generic and with Glenmark also coming in calling out the same. We expect PE compression to continue in this sector until and unless they move up the value chain into moving into complex drugs and biosimilars.
Vinit, what did you make of certain numbers that came out in after market hours yesterday, BPCL as well as Glenmark? What did you make of them?
So BPCL, I think the numbers were very robust. This is despite the threat of their margins being cut by the government to subsidize crude oil pass on to retail customers. I think the Kochi expansion which is coming through will be positive for the company, and with the oil having sold off just a little bit, I think the stock is up for a up move in the short term.
Is that the best idea in the OMC space, or would you believe that maybe HP or IOC offer a bigger bang for the buck?
I think BPCL offers the best buy in the space.
What about Glenmark?
As we spoke, that with pricing under pressure, I think we should let the erosion in share price settle down at lower levels and then take a look at that stock. Right now, it's not on my radar.
What have you heard of Jubilant FoodWorks? There's a lot of rumors about the stake sale. So the company's come out and denied it. The stock sold off a bit yesterday in the anticipation or the run-up to that possible event or a speculated event. Do you think normalcy returns today?
Yeah, I guess the normalcy should return because I was quite surprised they're at 45% shareholding. And why would they come and sell out into the market in this fashion? So the management has come and denied that, and I guess there should be a rebound in the stock.
So fundamental though on Jubilant FoodWorks, it's not a cheap stock, Vinit, by any stretch of imagination. Does it continue to enjoy that scarcity premium by virtue of it being one of the few places and the fact that the same store sales growth numbers have looked only up over the last 2 or 3 quarters?
Yeah, so they've got the menu right, and they've done a survey in which pizza is getting a thumbs up more than the burger snacks. That is one, coupled with their new offerings, and third is same-store sales growth doing very well, and they've beat expectations of analysts on both last 2 quarters. I think the uptrend will continue to move. Consumerism is on an upswing.
What do you make, Vinit, of Fortis Healthcare? Now the circle has been complete. Now fresh bids will be invited on a balanced scale. If someone is looking to, take an investment into Fortis for a long term, do you think that all this is priced in, or there is potential for upside?
While the while the Enterprise is a very brilliant franchise to have acquired, it's one of the largest chains, and any acquirer who comes in will get a ready operations right from the word go. I think that there are still more skeletons tumbling out of the cupboards, and one needs to be very cautious before investing in this. And at this point in time, in my opinion, it would be better for things to clear out more before getting into the stock.
Okay, we wanted to talk about the technicals on Jubilant FoodWorks. GNFC is the other one that we'll talk about fundamentally, but Chandan, Taparia, Jubilant FoodWorks, a quick thought here.
Yes, overall trend for the stock was positive, but on last trading session we have seen liquidation of long position as open interest fell down by around 10% with decline in price by around 5%. Expiry to expiry basis is still up by 2%. Just a couple of days back it made the new lifetime high. So I think some weakness could be seen, but that could be bought. As of now, the 2500 is likely to act as an immediate support. And if that is respected, then only the fresh up move could be seen. And what is the nature of this counter from last 1.5 years? That every time it goes near to its 50-day exponential moving average and then makes the new lifetime high. And a couple of days back also it did the same and then headed towards higher territory. So again I'm looking the same price behavior. If it comes near to 50-day exponential moving average, I'll again buy for the up move towards the new lifetime high territory in the counter. And that is the behavior working well with accuracy from last 18 months in this system.
Okay, stay on, Chandan. So much more to talk about. We'll start off week. Asia has shown its hand. The SGX Nifty has shown its hand. And the pre-open session, I'll be really surprised if they show anything otherwise. All over the place right now over the next few minutes. So the Nifty 50 showing that 1% uptick. But I tell you, it will start off lower. Has to start off lower. The Asian markets have already shown us that we will not start off on a good note. Maybe start off with those one or two pieces of good news, and if they are reacting at all. BPCL, not a bad set of numbers, but let's see. There's multiple news in the OMC space. BPCL looking like starting off on a good note, but this may well change as well. Let's wait and watch. The numbers look good. Glenmark, the numbers, as Darshan says, horrible quarter, very weak commentary, slam dunk there. 10% lower, Darshan. This may not be it.
This will change, but no doubt that's the first reaction that we're getting.
Yeah, so a weak reaction from Glenmark to be anticipated. Let me just line up what's moving around. Remember yesterday, Lupin, by the way, is also looking like starting off on a weak note, though this may change. But yesterday, the PSU banking space came under a lot of stake. 2.5% down for the index by and large. SBI was down about 3%. Some of the others were correcting. Bank of India, BOB, etc. all corrected. Let's see what's happening today. For now, they're looking like, okay, let's wait and watch. Let's give these rates a chance to stabilize. I just want to mark one stock before I give it over to Darshan, and that is Jubilant FoodWorks, and let's just see what that is doing in the session today. Very volatile yesterday. For now, doesn't look like it's bouncing back in a hurry.
Yeah, so the other counters that we want to speak about will be the result people. So BPCL came out with a strong set of numbers. Let's see how it's reacting. It's reacting on the positive side. The other two companies with strong numbers were Max India as well as Himadri Specialty Chemicals. So Max India has started on a positive note. Himadri, that's also started on a positive note. Power Grid was weak. Dish TV was weak. So let's see, Power Grid is trading down. Dish TV probably will be trading down. Glenmark, let's see whether it's come up from the lower circuit that it was. It's still down almost 10%. Narayana Hrudayalaya was the other counter that reported weak set of numbers. Bharat Electronics is something that reported weak set of numbers. Thomas Cook also reported weak set of numbers. So most of these companies have been down in trade. Eveready, Thomas Cook has moved up. Eveready Industries was weak. Also look out for Fortis, what's happening post the entire news in terms of the restructuring. It's opened up flat, and Indigo announces a fuel surcharge to counter the recent uptrend in fuel prices. And let's pull up the other aviation stocks also, whether a jet or a SpiceJet has reacted. So all of them are reacting positively in trade. Let's pull up Vardhaman Textiles. HDFC Mutual Fund bought in 1% stake in the company yesterday. And why not bring up 1% beverages? Let's see, the circuit filter has been revised to 10%. No, this is Manappuram Finance. Yeah, I was rather surprised if 1% beverages is the stock that, everyone's watching out for. It's down 10%. So 50% off in the last 3 trading sessions. It's pretty much going the Vakrangi way, which probably I believe will be another on a lower circuit also. So let's pull up Vakrangi if we have. So that's also down 5%. So not the best of starts currently.
Yeah, not the best of starts for sure. 1% remains a drag. We'll talk to Vinit about it. I just want to mark what the rupee and the bond yields are up to. The globally there is a bit of a pullback, and the rupee after 67.87 yesterday, just about a paise, so very, very flat for the currency. The bond yields, they had shown a bit of a pullback too at 7.73, lying absolutely flat. So no movement in the Indian macro calls, which is the rupee and the bond yields, which is probably not a bad sign. Before we talk about 1% beverages with Vinit Bolinjkar, want to get in Somit Sarkar, who joins in with the top brokerage calls for the morning. Good morning, Somit.
Good morning, Neeraj. On the big brokerage call today, we have is IDBI Capital All Indian Multiplex Sector. Now, according to the brokerage, the India's demographics and low penetration of screens provides a huge opportunity of growth for the multiplex sector in India. Now, along with this, the surge in discretionary spending is expected to benefit the sector, according to the brokerage. Now, despite poor content in financial year 2017 and 2018, PVR and Inox Leisure have demonstrated a strong capability to drive growth in the non-ticketing revenue. And now in FY19, with improved outlook for movies, the growth momentum from this segment is expected to sustain, according to the brokerage. Now, this rise in non-ticketing revenue will drive the return on equity for both the companies, that is PVR and Inox Leisure, according to the brokerage. For Inox Leisure, the brokerage has initiated a buy rating with the target price of 367 rupees, which suggests a return potential of close to 37%. Now, the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 16%, 22% and 37% over FY18 to FY21. The brokerage also expects the non-ticketing revenue to grow at a compounded annual growth rate of 20% over the next 3 years. For PVR, the brokerage has initiated a buy rating with a target price of 1700 rupees, which suggests a return potential of 27%. Now, according to the brokerage, the company's revenue, EBITDA and net EPS is expected to grow at a compounded annual growth rate of 15%, 20% and 32% over FY18 to FY21. And being PVR the best multiplex in India, the brokerage is saying that the company is best placed to benefit from the improved outlook for box office in financial year 2019.
Okay. Thanks a lot for that. Stable names, some stable calls there. Somit, thanks for putting that into perspective. What's not stable though is 1% beverages. Down another 10% today. Vinit Bolinjkar, have you guys at Ventura covered 1% beverages? And if yes, then what's the call now? If no, just looking at what's happened to the stock the last few days, what would your advice be?
So basically this stock is obviously corporate governance has taken precedence out here, and it's all sell on news. An auditor of the likes of the Big Four coming in resigning is not a very encouraging sign. As we have seen with things happen with Vakrangi and PC Jewelers, I think this stock has got sharply derated, and we would really be looking more into detail and assimilating our thoughts on this, because we would refrain from commenting on this, as we did have a buy on this stock.
Okay. Vinit, good having you as always. Thanks so much for taking the time out and being with us this morning. That's the view from Vinit Bolinjkar of Ventura. Deven Choksey of KRChoksey Securities joins us on the show. Deven, good having you. Thanks so much for joining in. You know, I'm starting off with the micro, and then we'll move on to the macro and what's happening across the world as well, because what's happening in Europe will probably have implications on the general investing as well. But 1% beverages, Deven, for a stock which is owned, has almost 21% DII holding and some marquee funds buying into it, out of the blue, there seems to be these big corporate governance issues that are now coming out. And, you know, as somebody told me yesterday, this is the same auditor which has audited the numbers for the last 7 years, the annual results, and passed them off. In 1 year, the scene seems to have changed dramatically, and it's resulted in erosion, a massive erosion of shareholder wealth. Now, did you guys ever look at 1%? And therefore, what's your take now on this one?
Good morning, Neeraj. Not that we haven't looked at the company, but we have never, I think, put on our investment or the recommendation in the company. Neither we got the coverage on the company. So on that front, I think I must put this disclaimer. However, I think when you look at every company for investment sake, I think you look at, you don't easily come to know about the kind of data integrity issue or for that matter information integrity issues, because generally you try and rely on the public disclosed information, and that's where I think you stand. So as of now, I think we don't know enough about what has gone wrong. But certainly, I think when any company, the auditor of repute, when they starts what you call giving up or they resign, I think there is more to deal with the subject, I suppose. And I would think that the regulator would probably demand an equal amount of explanation from the auditors as they resigned, I think in form of the information. Because since it's a listed company, I think they owe this particular responsibility to provide that information. And certainly, I think the company also needs to put this information across in the public domain. Should this happen, then probably I think one could take a balanced view of the situation. But as of now, as I said, since we don't have any coverage on the company, unable to speak more about the subject beyond this level.
Okay. I think, Neeraj, let's pull up Vakrangi. This huge amounts of volume that's happened, almost 4 million shares is something that I see in the pre-open that has happened. It's down on lower circuit, but finally I'm seeing some bit of volume. Will today be the day that Vakrangi, the circuit opens? It'll be interesting to see that. But Deven, on a broader market, what are you recommending clients these days? Stay on cash, invest more, invest only in large caps, or invest only in mid caps since they've corrected? What's the strategy that you're recommending?
So I think as the last part of yours, I think correction, we use the correction to a greater degree to buy individual stocks. The broader view on the market is very clear that while index will struggle to move up in the current situation, neither it will go down in hurry. But the fact is that I think it is going to remain range bound for sure, because there are heavyweights in index where the situation is not still conducive, and they are basically pulling down the index stocks, and as a result of the index itself. So our approach has been from the very beginning of this year particularly to stay focused on individual companies, and I think whether it's a large cap or mid caps, I think we like to buy the story where the fundamentals and the growth supports. Within the large cap baskets, you have a good set of companies where one could possibly look at. We have been liking companies in the particularly auto space, auto ancillary space. We've been liking companies in the NBFC space, particularly in the housing finance and consumer finance areas individually. So we like those companies. Insurance companies we have been liking, so we add into them because the correction of a sharper degree makes proposition attractive for likes of HDFC, life insurance kind of companies. So certainly I think our approach is to go along into this market with quality names. Valuation wise, many of the pharma companies have also corrected, and according to me, I think that gives you an opportunity to selectively buy into pharma companies, fully knowing that I think second half of the financial year could possibly start showing relatively better performance. I think one would probably start accumulating quality pharma names into the portfolio. So that's the approach broadly we carry. And overall we find that the market, though little headwinds out there, but the fact is that I think this is the time when in a bull market you get opportunity to buy at the corrective price levels and the valuation. So yes, we are selective in picking up stocks in the market.
Okay, we're just hold on, Deven. We're just minutes away from the market opening, and we'll tell you all you need to know to stay ahead in today's trade. The street will watch out for numbers from ONGC, Alchem Labs, Apollo Hospitals, SAIL, and Torrent Pharma, as all these companies will report their numbers today.
Amongst the earnings that came out yesterday, BPCL, Max India, and Himadri Specialty Chemicals reported a strong set of numbers.
Well, it was a disappointing quarter for companies like Power Grid, Dish TV, Glenmark Pharma, Narayana Rudale, and Everready Industries. Most of them have opened down with deep cuts.
Indigo announces a fuel surcharge to counter the recent upward surge in oil prices.
And Jubilant Foodwork denies the news reports regarding the stake sale by promoter. The counter rebounds and is up almost 1.7% in trade today.
And in brokerage calls, IDBI Capital sees 37% upside in Inox Leisure and a 27% upside in PVR.
Okay, I think we're just minutes away from opening. Gaurav, anything interesting that you're spotting on pre-opening that you would recommend as a trade?
One thing that still looks a little bit decent is Infibeam, not a very favorite name by any standard, but yes, it's still positive after opening of 55 points. I think if it holds on to 168, 170 zone, it can test levels of 175 today itself. One can have a stop loss of 166 and buy Infibeam.
Okay. Is this your top call for the day today, Gaurav? Infibeam?
It's apart from what I have mentioned, but if you talk about the top call, I think Bajaj Finance below 2070 is a good sell. I think that would be my top.
Okay, so sell on Bajaj Finance is your top call for the day. Chandan, what about you? What is your top call for the day?
Yes, already discussed Dabur and Titan, and I'll continue be with the same. Sell Titan with a stop loss of 930 and looking for downside move towards 882. And for buying, one can look at Dabur as well.
Okay, so Dabur is Chandan Taparia's and Titan and Dabur are Chandan Taparia's top calls for the day. Maybe one quick question, not as a top call, Gaurav Bissa, but a quick thought on Vedanta, because that looks like starting out on a weak note yet again.
Vedanta has seen good amount of downside in last couple of trading sessions, but as long as it is trading above 240, I think it's a good position to buy with a stop loss of 239 and 240. Use dip towards 242. On the upside, 255 can be seen again.
Wow, he's giving a counter call to go out and buy Vedanta at about 242 odd levels with a stop of 239. But the markets are likely to start off on a weak footing. In fact, surely starting off on a weak footing. The question mark is, will there be substantial damage to the market breadth? Let's wait and watch. 0.5% down for the Nifty and the Sensex. The Nifty Bank, like yesterday, falling more than what the other indices have done. So down about 0.7%. I would believe the mid caps and the small caps too would have started off on a weak footing. Yes, the mid cap index down about 0.8%. The small caps, as they usually do, don't start off very low, but during the course of the day, you will realize they'll start underperforming if indeed the pressure on the market stays. Bring up the heat map. I believe a fair peppering of the red. In fact, almost all red, hardly any gains. But for M&M, which is continuing from where it left off yesterday, so it's up about 1.5%, was up about 3% yesterday post its numbers and the margin expansion. But aside of that, no reactions. BPCL marginally higher on the numbers, about 0.8%. But aside of that, no reactions. Look at the red on the screen. There is selling across the board. We don't have too many gashes, but for Vedanta and Tata Motors, we don't have too many gashes which are very deep. But 1.5% for a lot of stocks, some heavyweights like ICICI Bank. I saw HDFC and Reliance in the red as well. So small losses out there. All of that leading to the kind of cuts that we have. 0.6% for the Nifty 50. That's on account of enough and more gashes to a lot of Nifty 50 names. Let's take stock of what's happening to the newsmakers then, and just very quickly 2 or 3 pockets that I want to highlight. Firstly, the companies that came out with weak numbers. So Eveready 6% down, Narayana Rudale about 6% down too, and BEL about 3% down. So the weak numbers are getting punished. All right, all of them down in the session today. The gas leakage at Dahej has been contained, and which is why GNFC is not really fallen, because otherwise the stock would have cracked big time. The saga continues though for Manpasand Beverages. That one refuses to budge, 10% down, and I believe the volumes too haven't really improved. On the BSE in the pre-open session, there were sellers northwards of 2.5-3 lakh shares. So I don't think that this downward pressure on Manpasand is gonna ease, at least in the session today. Darshan, what are you spotting?
Yeah, so it's up 12% in trade today on decent volumes. Not a very high trade counter, but almost more than 10,000 shares have already been bought for Merck. It's up almost 14% now. So it's moving up in trade. ADAG as a pack is doing well in today's trade. So Merck, not Merck Electronics, Merck the pharma company, that is up almost 13% in trade. The ADAG pack, Arcom and Reliance Naval are doing well in today's trade. Jubilant Foodworks has managed to rebound. It's up 1.5%. That's what I'm seeing. Despite poor numbers, Dish TV is up almost 2% in trade. Vardhaman Textile, in which there was fund buying by by HDFC Mutual Fund is doing well. Gaurav Bissa spoke about Infibeam. That counter has started strong. We'll ask him about his view. Deven tracks Infibeam strongly, so we'll ask him about Infibeam also. So that's the view that's coming in. And ahead of the numbers, ONGC is doing well. Price surcharge hike in Indigo, and Interglobe is doing well. Manpasan continues to fall in trade. Surprisingly, Dilip Buildcon may go below the 1000 level. It's down almost 6% in trade. Glenmark continues to bleed. Some of the smaller counters, Just Dial, Info Edge was on fire yesterday, so profit booking is being seen on the counter. And Avanti Feeds again continues its downturn. The numbers were really poor for the fourth quarter. Avanti Feeds, the downward slide has started, so it's down in today's trade. So let's start with Infibeam. I think two of our guests spoke about it. Deven, what do you make of Infibeam? You all track this very counter very closely. What's the outlook that you have post the financial performance for the company, and what's your view ahead?
So I think the result is expected either today or tomorrow, and probably I think we should be seeing a good result coming out from the company. 2 or 3 factors I think I would put across, I think, where the things have changed for this company. In the financial year March 18, I think they've changed the business model and enhanced, I think, the activity from pure subscription based revenue model to transaction based revenue model. What they have done is for example, they powered a government C-marketplace, which is called gem.gov.in, where the entire purchases and sales of government is basically taking place onto this particular platform. Government of India, the center, is basically, I think, having an approximate volume of around 6 to 7 lakh crore worth of goods purchase, I think, for the requirement. And this is what I think Infibeam is powering. For them, this is a transaction value coming along with. So if on a 6 lakh, 7 lakh crore worth of volume which is getting processed, they end up getting around 10 basis point as a transaction revenue out of it. And this business has just started. So of course, I think in the March ended quarter, I think the contribution from this business is going to be negligible. But more importantly, 18-19 financial year, I think this business should contribute handsomely into the profit performance of the company. Second business which they merged and which is getting reflected into March result would be the CC Avenue, which is a payment aggregator and a solution provider on the payment side to almost all banks and the credit cards and all other financial instruments, banking instruments. So that is one area where they are adding significant amount of volume and the profit performance. CC Avenue is basically 85% market shareholder in this particular space, and this is what Infibeam is integrated with. Going forward, they have got eEconomist, which is a warehousing solution, which also they have picked up from Snapdeal just a few days back or few weeks back. I think this is one area where again I think the platform would probably become more strengthened and transaction based values would come out. So Infibeam typically is a company which is in an internet space, which powers the internet based e-commerce, I think, for most of the merchants, with more than 1 lakh merchants that they already have. I think this is where you see a larger amount of opportunity for this business, a unique company by its proposition. And I think globally also, I think very few companies in the service space who are running the operations successfully and making profit. So this is one company which gives you an opportunity from investment point of view.
Okay, investment idea from Deven on Infibeam. Gaurav already recommended as a technical idea, but autos seem to be stealing the limelight today, both on the higher side and lower side. M&M is the top gainer, up 2.3%. Brokerages are quite upbeat, but on the other hand, you have counters like Tata Motors, Maruti and Hero MotoCorp, which are bleeding in trade. Chandan, among the auto names, M&M is moving much higher. Do you see more strength coming into the counter? If someone wants to accumulate an auto stock, would M&M be the choice?
Yes, M&M will be choice, and we have recommended the same, expecting the next leg of rally into the counter. After the consolidation of last couple of weeks, the stock again started to move up, has been making high rise, high lows on daily scale and trading near to its lifetime high territory. And this is one of the auto counter which has been outperforming, followed by Escorts or Ashok Leyland. So expecting this momentum to continue. Slow and steady, the stock has potential to move towards 930 to 1000 kind of level on positional basis.
Gaurav Bissa, if he's still with us. Gaurav, opening thoughts on how the markets have started off as well. Not a big gash on the Sensex, but the Nifty Bank is down about 200 points. Would there be a trade on any of the key indices, considering there is expiry tomorrow?
I think the trade can be on Bank Nifty for the reason that, as I mentioned, 26,000 put option come under very high concentration. And just about right now, we are not seeing too much of a short covering coming in, even with the index opening almost at the same level. So I think if 26,000 in held, one can buy a 26,200 call option. It's quoting at 35, 36 bucks. I think one can have a support of 20 on the upside. It can more than double.
Look at Radico Khaitan, by the way, has moved up another 3%, and that makes it the stock that is trading at new life highs for itself, along with Mahindra and Mahindra, which is trading at new life highs for itself as well. I can't ask Deven Choksey about the liquor stocks, but maybe can ask him about what he made of M&M numbers and maybe the whole tractor space. Deven Choksey, M&M, Escorts, etc. The commentary, cautiously optimistic. The base a lot higher than what it was 3 years ago, and they've had a couple of years of outperformance too. What would your advice be to somebody who's looking at the tractor companies?
Well, I think already we have seen a spectacular quarter in March, and the rise in the volume numbers in the tractor business, farm equipment business by 44%, which is significant growth as far as I think the company's performance is concerned. And I think that validates the point that stronger monsoon would result into better agriculture activity and further amount of, I think, demand offtake for the farm equipment segments of products. Along with that, I think some commercial vehicle products also would get a form of offtake going forward. So I think this situation continues. Fortunately, we have a strong prediction for monsoon this year as well. And given the situation, I have no hesitation in saying that the farm equipment segment would continue to do well even in the financial year 18-19. The farm produce has started fetching better output, I think, as far as the volume is concerned. And most of the areas, agri-producing areas, are happy with this kind of a situation. So again, I think it is a good thing for the demand offtake for the farm equipment segment. So M&M particularly in the farm equipment segment, in a commercial vehicle segment, light commercial vehicle segment particularly, and even in the passenger vehicle segment, I think has been showing relatively better performance. So I think the story continues even in the current year. So remain optimistic. Yes, I think cautiously optimistic given the fact that I think we are dependent on monsoon, but favorable monsoon prediction. So optimistic at this point of time.
Okay, the stock of the Nifty for today is turning out to be Coal India. It's up 2.5%. Yesterday, when the numbers came, the counter corrected 5%. No doubt there were a lot of exceptionals that were there. I think clarity only came in once the management had the conference call and they explained what those one-offs were. The average volumes have risen 5%. The average realizations have come up 7%. And if you take the adjusted EBITDA, that is in fact better than what the street was anticipating. So Coal India trading at the highest point of the day. So Coal India is doing well. Gaurav, do you see the trend continue for Coal India?
It has a strong resistance at 295 zone, and if you look at the option chain, 300 of call option has been commanding a very, very high concentration. So I think use dips to buy. I would not be too comfortable buying fresh here. For people who already bought, have a stop loss of 286. Targets can be around 300, but fresh buying should be avoided.
Okay, interesting. Final thoughts from all our experts before we let them go. Maybe I can ask a question to Chandan Taparia on Radico Khaitan, which is up 5%. 494. Chandan, do you track this one?
We don't have coverage, but breakout is quite encouraging. Couple of days back, it has given a breakout from its triangle pattern and now has been respecting to its rising support trend line. So price pattern itself suggests the positive momentum. Stock can head towards 525. We don't have coverage, so no recommendation, but price pattern looks quite interesting for 5-6% up.
Gaurav Bissa, do you track Radico Khaitan?
I don't track it too closely, but yes, it's been forming a new high every time in last 3-4 days. I don't think it garners a fresh buy. One can keep on holding, but this is not a stock that one should buy at this point in time.
Deven, I don't know if you individually track some of these, but a bunch of these names are now trading, mid-cap names are trading sub the prices at which promoters agreed to put in money into the companies or have put in money into the companies. HCL Info, for example, a large proportion of their fundraising was subscribed to by the promoters at 49. The stock is at 43. Max Ventures, I think the conversion price of the warrants was at 78, probably gets done about in a month's time. The stock is at 68. I mean, do you look at some of these businesses and look at how promoters are confident, but maybe the markets are not because of various reasons? Any options or any observations here?
Well, I think at the peak, when you probably market your shares and QIPs are concluded, certainly I think under the pricing formula of SEBI, I think you end up basically acquiring the shares at a higher price, and that is what has happened in many of the QIP companies cases, I think, where the companies have raised money from the outside investors and they have basically suffered. Some of the promoter-based preferential allotment companies also have suffered in the past, including the likes of Suzlon, where Dilip Sanghvi's family has invested money, and probably I think the stock is exactly half of what they invested money with. So this situation is happening in a bull market like this. At the same time, I think some of the favorable QIPs which have concluded in the recent times, one among them which immediately comes to my mind is Minda Corporation. The company marketed the issue sub 180 levels, and today the stock is above that level, even though I think the marketing has happened just I think a couple of weeks back. And I think today the result has come, yesterday the result has come, so result is also good. So I don't know, I think I cannot immediately correlate everything to the price with the kind of issue that they have made, but more importantly, if the financials and the fundamentals of the company are supporting, probably I think the stock prices should bounce back in a quality name. So I think that is where one will have to keep an eye on. Minda, certainly we believe, I think is, since I mentioned this company, we believe that I think this is a company where the opportunity basket is much bigger. So I think such kind of company should be looked at from the investment perspective.
Okay, Deven, we leave it at that. Thanks so much for speaking to us on Bloomberg Quint today. Also, a big thanks to our technical experts, Gaurav, Bissa, as well as Chandan, Taparia, for joining us and giving us their perspective on the market. Thank you, guys. But before we take a break, let's go across to Nikunj, who's got an exclusive story on IDBI Bank, the NPA-laden lender who's also been put under the RBI's prompt corrective action plan, wants to split its retail and corporate verticals. Nikunj, how will this help the bank? Nikunj, can you hear me? I don't think Nikunj can hear me, but okay, but before we move on to Nikunj, we'll try to get Nikunj on a better line. Just let's take a look at what's happening with the Nifty. The Nifty is down almost 70 points. The Sensex down 200 points. The Nifty Bank over the past 2 days has fallen over 500 points. Coal India continues to be the stock of the day. It's up almost 3.5%, followed by M&M, which is up 2.5% in trade. So that's doing well. Axis Bank, Hindalco and Tata Motors are the counters which have dropped significantly in trade today. Also pull up Jubilant Foodworks, a big bounce back that's come in on the counter. It's trading at the day's high post, the company indicating that the block deal will not happen. But Nikunj is back with us. Nikunj, what's the scoop that you have for us? How will this entire scenario help the bank?
So firstly, IDBI Bank has submitted a revival plan to the government seeking to separate its corporate and retail banking operations. The plan was submitted about 2 months ago, and the government is also in favor of this idea. The government thinks, and the officials we spoke to also said that one way to address concerns of potential investors could be to segregate the retail and corporate assets of IDBI Bank. Then going ahead, the government could sell stake in a retail bank, and also a separate entity which holds corporate loans could focus on resolving the stressed assets. Remember, in the budget of 16-17, the government had said it wants to cut its stake, it wants to reduce its stake in IDBI Bank to 50 below 50%, and this would be a better option for the government to sell its stake going ahead and would attract better valuations for the bank. Over to you.
Okay, many thanks for that, Nikunj. We'll certainly watch out how the stock reacts. Let's pull up IDBI Bank and see what it's trading, almost flat in today's trade. With that, it's a wrap on this edition. On the other side of the break, we decode the fourth quarter earnings with KK Modi of Godfrey Phillips and PV Ramesh of REC.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution hai. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
You have to chase the value. What market is reflecting is change in the value. It is because of value migration that you keep seeing the new businesses coming up, new companies coming up. Value migration by Adrian Slavetsky. It is a wonderful book by a professor from Harvard.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you. Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior most editors. Weekdays at 8 a.m.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. The Nifty Bank about 0.8% lower, and that's really the key culprit in the markets today. By and large, the other aspects seem to be a lot more stable than what otherwise would have been feared. The rupee and the bond yields too trading reasonably okay. Let's move on to the corporate section. A higher tax burden dragged Godfrey Phillips' earnings in the fourth quarter. Lower volumes hit the top line. The maker of the Marlboro cigarette brand in India took a price hike of 6 to 8% and cut advertising spends by nearly 12% to protect the margins. And that was the only silver lining, or that was one silver lining in the company's financials. Let's analyze these numbers in greater detail and understand how the company plans to deal with one, higher taxes, and two, arguably, maybe demand issues as well. Mr. KK Modi is president at Godfrey Phillips India, joins us right now on the show with his thoughts on business by and large for the industry and for his company. Mr. Modi, good having you. Thank you so much for taking the time out and speaking with us. While I know revenues are not strictly comparable with the base quarter, but if you include the taxes in the previous quarter numbers and this quarter numbers as well, despite that, you would agree that the volumes and consequently the revenues have looked a bit soft this quarter.
Well, these are marginal changes in the volume in cigarette industry. Over the year, I think the total industry had declined by 4%. Number of cigarettes the Indian industry has sold officially, because the total volume include also illicit cigarettes which come into the market, which are around 25% of the market.
Please correct me if I'm wrong, sir, but your gross revenues, despite the price hikes and inclusive of taxes, I'm not excluding the taxes because otherwise the net sales look down 38%, but inclusive of taxes, there is a 9.3% drop, if my numbers are not wrong. So 1460 versus 1610. What led to this performance?
These are mostly correction of stocks, but the market share this year is of GPI has gone up, and it is steady. So I don't think actual sales volume is different.
Okay.
It's similar to last year.
Okay. So. Okay, so then how would you sum up the year? Flat volumes, but your market share has moved up. Is it because the other companies have lost market share by and large? Because if you on a flat volume base are increasing market share, surely somebody is lost out market share due to lower volumes. So therefore, how does the industry look like in FY18 and how does the industry look like in FY19?
FY18, the industry dropped by about 4%, and that is why we have gained market share, even though we are flat. And 19, maybe the industry may be more or less flat. There may not be any decline.
Okay. And in such a scenario, how would Godfrey Phillips as a company do? I'll come to the quarter as well. I want to talk about profitability, but I just want to get a volume sense and the revenue sense, Mr. Modi. How do you think you as a company will do in FY19 in an otherwise flat year for the industry?
I think our volume will go up slightly, not too much, in single digit, and we will be in line with the result of the rest of the industry.
Why would this be happening? Is it this conscious call by residents in the country to reduce smoking? Because otherwise, cigarettes used to be a sunrise industry. A lot of your marquee brands hitherto have always done well. Why is it that 2 years in a row or maybe longer, the industry volumes are looking stagnant?
Because of the illicit cigarettes. There is a very big import of the non-duty paid goods into the market. Euromonitor estimates the market is about 1/4, which is not official, which is either made into small companies in India or imported.
Okay. You know, we wanted to ask you about...
So the tax-paid cigarettes are flat.
Okay, okay. And we actually wanted to ask you about what the impact of GST and cess has been on prices and on volumes as well.
Well, there has been a slight increase in prices because of the duty increases, but not very significant.
Okay. What about your brands? Last that I know, I mean, your prices and on separate brands as well, because Cavender's prices were hiked by about 6%. I believe Marlboro were about 8% odd. And the last known hike to us was in December. Have there been any more price hikes post that? And would you look to do some price hikes in FY19?
No. Well, FY19, there will be some price adjustment, but not very significant. It depends upon whether the government changes the tax or not. If taxes remain stable, prices will also remain stable.
But you don't foresee...
So industry is not going to increase prices.
Okay. Okay. So you don't foresee increased prices. Okay. In which case, sir, may I ask you, how would you look to, one, invest, if at all, into enhanced distribution, and two, what would a company like yours do on the cost front? If prices are not going to go up, would you believe margins will remain stable, or due to increased distribution there could be enhanced costs and therefore there could be some pressure on the margins?
No, I think margin will remain stable, We believe 2019 will be a better year than last year.
On what parameters, sir? I mean, volumes will remain flat, so that is done. But what would be better in 2019?
No, there will. Well, one, Marlboro is growing, and our premium brand is Marlboro, and we hope that other brand Foursquare, Red and White, and Cavendish will also gain market share.
Okay, what would be your current market share, sir, and what do you expect it to be at the end of, say, FY19?
Well, our market share will be slightly higher than 12%.
Currently?
Yeah, but the difference between the market share now and market share end of the year may not very dramatically change, but there will be no decline. There will be growth.
The conversation, Mr. Modi, seems to suggest to me that you are looking like a company which is looking to consolidate at these levels and not really trying to go out and grow meaningfully. Is it because of the way the industry dynamics right now are, because of the illicit cigarettes, etc., or would you look to change that at some point of time over the next couple of years? Does Godfrey Phillips as a company get into a high growth mode at any point of time in the next 2 or 3 years?
Yes, as we are not present in whole of India, we are only selling approximately in 40% of India. We are looking to geographical expansion, and it is just starting. We are introducing our products in South India where we are not present. So if we get a good reception there, then the growth area will be there.
Okay, but that won't happen in 2019 necessarily. It probably happen in FY20, I would reckon, because FY19 you are guiding to flat volumes.
Well, not flat, but slight increase.
Okay. Fair call. Mr. Modi, we wish you all the best for the year at large. Thank you so much for taking the time out and speaking with us today.
Thank you.
That's Godfrey Phillips. You know, this discussion is important not just from a Godfrey Phillips perspective, but from a perspective of the industry at large. ITC, remember, a lot of its fortunes fluctuate on the basis of what happens to the cigarette business. And out here, one of the players with 12% market share believes that the business or the sector volumes are unlikely to rise in any meaningful fashion in FY19, and the problems of the illicit or the spurious cigarettes does stay. This has implications for the other players in that space as well. Okay, talk about the next company, and that is REC. The power sector is being looked at as the next big area of distress. Almost every bank would say that. A number of discoms are still reeling under heavy debt, and power plants are operating at suboptimal capacity utilization levels. One company that has to navigate, unfortunately, its way through all of this stress is REC. Joining us now to talk about the last quarter and the road ahead is the Financial Lenders Chairman and Managing Director, Mr. P.V. Ramesh. Mr. Ramesh, good having you. And thank you so much for taking the time out. It wasn't expected to be otherwise, but it was a weak quarter. There were a high NPL recognition, which led to lower net interest margins as well. Can this story change, Mr. Ramesh, in FY19? And what were the key highlights according to you for the last quarter, as maybe for FY18 as a year?
Good morning, and thanks for having me.
Pleasure.
Let me clarify this, that we are in the long-term power sector development business. So it's not fair for us to be judged on a quarter-to-quarter basis. But taking the annual performance, you can see that our loan book has grown about 20%. Our sanctions have grown 28%. And our disbursements have grown about 3 to 4%. And we continue to remain profitable. After profit after tax, we have declared something like 4,647 crores. So we continue to be one of the most profitable financing companies. And we have, though we are an NBFC and not covered by the Reserve Bank of India circular of 12th February, we have taken a proactive action because in a prudential norms to make aggressive provisioning for all those assets where we are part of a consortium with the other banks. So in that sense, the past is behind us. Now let's look at what future holds for us. I mean, it can only be, it can only grow from strength to strength. I mean, that's because of the massive investment that's being made in the power sector by the government as well as the need for investment. I mean, the Deen Dayal Upadhyaya Gram Jyoti Yojana alone is investing about 1 lakh crores in strengthening the distribution infrastructure. There is an equal amount of investment that is being made by the government and the parastatal agencies in the interstate transmission and intrastate transmission. Now, if you see the CEA projections, it seeks that you would require at least a 9 lakh crores investment between now in generation segment between now and 2022, and if you stretch that to 2027, that would be almost about 19 lakh crores. And same thing holds good for transmission transformation segment, I mean, which basically means annually the investment needs in the power sector would be anywhere between 4 to 5 lakh crores, and we have almost 1/3 share in the or maybe larger in days ahead in the overall power sector investment. And this is likely to become higher as the Saubhagya scheme of the government, which seeks to reach out to each and every household in the country, which is about 4 crore households. So at the end of this year, it is expected that there would be no household in this country without access to power. And as you know, all the villages in this country have been electrified at the end of April this year. So this is a march that will continue, and as an institution that is at the center of the power sector development in this country, not only in terms of financing, but also as a nodal agency for the government programs, and also in supporting the state sectors. I mean, through Uday programs, through DISCOM capacity strengthening, to state utility strengthening, through our subsidiaries and Energy Efficiency Services Limited, which is our joint venture company. We will continue to grow in the coming years. We believe that our NPAs would go down substantially. A number of assets are likely to become standard during the current year. We are working on them. We have set up a separate dedicated team to work with the other partners.
Mr. Ramesh, I would want to ask you on that precise question, because that was going to be my next question. A very deep hole that a sector might be in, and various sectors have been in that in the past, can be filled in two ways, right? One is that the cycle turns naturally, as we saw in the metal space. The global cycle turned, and therefore that sector was able to come out of the hole almost on its own. And the other way to do it is by filling in it with fresh sand. In the power sector's case, my question to you is, the cycle doesn't seem to be turning anytime soon. Do you think there is wherewithal to invest so much of fresh gunpowder into a space which is reeling so badly, so as to be able to bring it out of the hole that it is in?
No, let me say this. Let me say two things. I mean, the very fact that our sanctions have grown 28%, and of 50, half of that in the generation segment, and this all in the state sector, and the states are investing. The government is committed to 24/7 quality power to all citizens, and this demands that there has to be investment. Almost about 25,000 megawatts of thermal power stations are older than 35 years. They need to be replaced. Several of the thermal power stations need to be retrofitted with the FGD infrastructure in order to comply with the Paris Protocol agreements. So, and then renewable energy, as you know, is marching faster. I mean, now we have almost 70,000 gigawatts of renewable energy in the country. 175, another 110 gigawatts is expected in the next 2 to 3 years. So there's a lot more capacity generation that is taking place. This is precisely because the much needed investment that was not made in the past in the transmission and the distribution infrastructure is being made now. The Deen Dayal Upadhyaya Gram Jyoti Yojana alone as a government grant, as a Government of India grant, is about 1 lakh of crores is being invested in strengthening. And this is just a catalytic investment, and this in turn leverages financing from institutions like us. And so the massive investment, I mean, because this is mandated essentially by the need to provide 24/7 quality power to every household, and particularly those remote and interior areas, rural areas, which have traditionally been. So, I mean, in the sense, the power sector is on the cusp of transformation. I think people need to see this. But let me also qualify what I'm saying. Just give me a second. Is because these are long gestation projects. Investments take time to manifest in results. These are being telescoped and accelerated. So you would see that in the next few months to years, you will see a big transformation. So power sector, I would like to believe, is on the cusp of transformation, and you would see a story that is really exhilarating in the days ahead. And that story, I believe, is not being told. I mean, the very fact that we have taken power to every single household, village in this country, I think is a landmark in the history of this country.
Sure it is, and for the sake of the country at large, and not just for shareholders of REC, we do hope that this story evolves at an even faster and a better clip, Mr. Ramesh. So I sincerely hope that that does happen. Just 3 or 4 questions, more from a shareholder of REC's perspective. You know, while the cleanup is done to an extent, people believe, or brokerages believe, that the low coverage ratio will likely result in a higher provisioning in FY19 as well. Can you throw some light on some numbers out there?
No, I do not believe that there would be a higher provisioning. Let me be emphatic in this case. We have made the required provisioning. In fact, we are expecting at least 4 of these assets to become standard in the next 1 to 2 quarters. From Haldia to Nagai Power to SR Transmission, we expect, and Meenakshi. These 4 assets are, or where we have a exposure of more than 3,500 crores, are likely to become standard. And so we are working on the other assets as well to ensure that they become standard. We are working on various alternate modalities as well with the other financial institutions and the government to see that the assets are become standard. So I do not believe that would be the case. We have been actually aggressive. Actually, we are an NBFC who are not covered by the RBI norms. Nevertheless, we have gone ahead and made provisioning. I mean, without applying those norms, our net NPS would still be around only 2%.
Wow. Yeah.
So for the shareholders, I think it's. I can assure them that it will continue to be a good story.
Okay, let me try and get some more numbers. I'm happy you are saying that provisioning won't be higher, because what brokerages have said that and have factored in a higher provisioning, and on back of that, they are saying that the ROA FY19-20 from REC could be about 2%. You believe that's a conservative number, or and could there be a higher reportage there?
No, I think that's too conservative. I mean, we have a robust growth in our business, and our NIMs are closer to 4%, and our yields are higher than 3%. I mean, very few in the league have this level of returns on investment. So, I mean, I want to assure the shareholders, and I would like to engage with the analysts, and we are soon having a conversation with them, and we would like to clarify these things if there are issues. But I can assure you, we will continue to be profitable. We'll continue to grow. We'll continue to expand, and we'll continue to play an important role in power sector development in the country.
So ROA northwards of 2% at least, ROE northwards of 13-14% in FY19, FY20.
Absolutely, absolutely.
Okay, last question. In FY18, with the dividend that you've paid, it makes a very attractive dividend yield play, right? I mean, 9 rupees per share or 9.15 per share to be precise.
Absolutely, yeah.
Makes it a very attractive dividend yield play.
Yes,
do you believe
9.15.
Yeah, do you believe these numbers or numbers in the similar vein could be sustainable in FY19 as well, looking at the business momentum?
Oh, yeah, absolutely. I mean, I see we have a business pipeline, a robust business pipeline until 2022. We have signed memorandum of agreement with several state governments, providing for a financing assurance for the next 5 years. So we have worked out. I mean, I'm speaking with the confidence of data, of the hard work that we have done behind the scenes, of having worked, because 86% of our exposure, our loan book is exposed to the state utilities. And today, our major lending is to the state sector and also to the central institutions like NTPC and the others. And then we have a very active footprint, expanding footprint in the renewable energy. As you see, our renewable segment sanctions this year had been about 9% of the total, and disbursement is nearly 7%, and this is likely to grow. So I would like to assure you and through you, our shareholders, that our company would continue to grow, to be profitable, to continue to pay handsome dividend to the shareholders, and then we will continue to play a major role in power sector development in this country.
Okay, we wish you all the best for that, Mr. Ramesh. Pleasure chatting with you. Thank you so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you for having me.
That's the Chairman and Managing Director of REC assuring about much better ratios and performance going ahead. The stock marginally in the green. The markets too, off the lows of the day. The Nifty Bank in particular, now just down about 1/3%. This is not to say the stress is over, but for now, we've recovered very smartly from the lows of the day. Wrap it up on this leg of Indian Open. Up next is the FNO show.